What's up, guys? This is Carter Thomas with Coin Mastery TV. Make sure you go to coinmastery.com/invest. Put your name and email address in and join us in our newsletter. Get some free PDFs, updates, market domination reports. I'm just kidding. We don't do those, but we will give you good information, especially if you're just getting started in crypto and for people that just want to make better decisions, learn about the markets and the psychology of what is hot, what's working, all that good stuff. Today, we're talking about what's happening with kind of a critical juncture with Bitcoin price as it stands. Talk a little bit about Litecoin and the overall market. Looking at what this transition period may look like. I think it's going to help you guys as you look at your portfolio as a whole. That's really one of the big goals here. I want to talk a little bit about some things that are happening in the space, both inside the crypto world and on the more of the macro regulatory side. And then a few final words just about what you can expect to see from retail investors over the next couple weeks, months, whatever. Some interesting things happening. I think that these are the kind of moments that make a huge impact on the future of crypto. So that's why I'm really excited about it. Before I forget, I put this tab up here. So many people ask me about taxes and stuff, and I can't really get into it. And this is not sponsored at all by any. These I have nothing. But if you want, you should make sure you have an account at CoinTracking. You go to coinmastery.com/tracking. The reason why it's free to use, like you get a free account if you decide to get the paid version, which allows you to do like 3,000 or 4,000 trades. I'll get a small commission, but I can't get into the actual tax strategy. What I can tell you though is that make sure you have everything documented and all your trades logged somewhere. CoinTracking can help you. So go there. It's just a good resource. It's the one I use. It's the one that I have found to be the most helpful. So anyway, I've just been getting a lot of questions about that. That's why I wanted to let you guys know. Let's talk about Bitcoin. We have been looking at these lines, and I moved this line up a little bit, this red line, because now we're at this true previous resistance, and this was a pretty big one. And you can see this morning on the 1 hour, if you're listening on the podcast, we are looking at the 11,700 area. Now, back in late January, on the 1 hour at least, we saw this level be tested basically 3 times. The first one was a little bit above, 2 more that couldn't break through. We saw the big dump after that, and now we're trying to make our way back up. And we are right on the cusp, and that's why we're in the 1 hour. And you can see that we're getting some pretty good volume in the last 24 hours or so. The volume has really come to life to hopefully push us through this really important moment in the future of Bitcoin's price. And what I mean by that is it's going to come down to a few different scenarios. The first scenario, which selfishly I think we would all agree would be great, or at least in the short term, is that the volume would continue. This would blast through this red line, which is the resistance line. It would also blast through this pink purple line, which is the longer term, I guess you could call it bear trend line. And if it goes through that and it confirms on something like a daily candle, that's really good news. That shifts the momentum of the market. That means that we are moving in a more positive direction. Now, nothing is absolute in anything in life, really, but especially not in markets. But that's why this is such a big deal. Because if Bitcoin's price bounces off of this, we're going to be stuck back in this whole no man's land zone, and we're just going to keep moving back and forth. And maybe we test it again. Maybe we bounce back off this 10,000 level, keep going back and forth. And obviously, there's going to be some retracements within that, right? Like you could run a retracement on this little run that happened. But all eyes are really on this whole, I guess, area, right? Over the next 2 or 3 days, I would say, really looking at the volume and looking at this 11,700 level. And then wherever it gets close to this pink-purple line, we need a lot of juice to get through that. Now, let's talk about the other scenario, because you got to have a plan no matter what happens. Let's say that this does go stagnant for a while, Or let's say it breaks through and it goes down all the way back down to a previous level, like 8,900 or whatever it may be. You got to have something that you're gonna do in the meantime, and you can't assume that, oh well, if Bitcoin goes down, altcoins are going to go up. You have to assume the worst case scenario in every situation if you want to really protect your capital. And so what I would encourage most people do is, if you don't have fiat, the best scenario is often just not doing anything, assuming you believe that this is going to go back up at some point. Now, obviously, daily reminder, this is not professional advice. I'm not a financial advisor. You got to make your own decisions. But that's really what I would be doing, is making sure that I can capitalize on any dips. I watch it very closely, and most importantly, not freak out, because I personally do think that no matter what happens, we're going to make it through here. It just may take a little bit longer than we might like. And in the interim, I'm not going to get stressed out and hopefully not make any bad decisions. That's the plan, at least. So we're really watching this. If we really zoom in, you can get really granular about, look at this 5 minute. We're right there just on this line, and you can see it already starting to come back a little bit. So you always want to go with the longest confirmation you can. Anything from 4 hour up to daily is typically the best move. But when you're on the 1 hour, the other thing you can do is you can look at something. You can look at more indicators. If you are interested in this kind of stuff, there's a lot you can do, where in this case, I think it's helpful actually to look at something like the RSI, which shows how overbought or oversold this particular price is. It means like how much strength is left in this particular run. Now we're right at the top of this channel for the RSI index. I shouldn't say the RSI because that is the index indicator, I should say. So meaning all the technicals are saying there's a ton of resistance that's building right around this point. You go to a 4 hour, it's going to look even more, it's going to look like there's even more pressure on this price to come down to get some fuel to break through later on. So as you dive into more indicators like that, you can start to make your own decisions, but it is good to just get more data points so that you are not getting ahead of yourself. You do see, you can already see that this is starting to come down right. Just bounce perfectly off that line. So we're going to see what happens here. If you wanted to, you could draw a retracement, a Fibonacci off of this, 50% retracement, maybe do a short-term, like a very, very short-term scalp, but try not to get too cute about it. That's usually when you lose a lot of money. Now we're looking over at Litecoin, the USD chart, which had a really good run. We were talking about Litecoin pretty much as it was doing its thing. It had a huge run up, had a little bit of a run up yesterday, but if you guys have been watching this channel, you know that anytime you see these kind of vertical green bars, which is what we saw on the 13th, right between 150 up to, let's say, 210, this is not sustainable. When you look at the overall chart health, it's like building a house on stilts, right? That's kind of the analogy you can use. And if you look over here, when this thing was ramping up, we were talking about how this is not sustainable. And lo and behold, look at this. It traded all the way down to the bottom and it worked. Guess what's going to happen with this price? And that may not be the best news for some people. Some people might not like it. But in my opinion, just whether I like it or not, that's what I think is going to happen at some point. That it may go up for a while first, but at some point, it's going to have to come down to this line, 170, give or take, to clear out this, this run that happened. It'll probably go below that because there's going to be some stop losses. So typically what will happen is it'll hit this. You'll see some people come in that'll trigger all these stop losses down. You'll get a wick to really clear out the rest of that candle, and then it'll start moving up. I do not know when it's going to happen, but for me, I don't think that I'm going to buy any more Litecoin until I see that come down. I think that a lot of this was about the fork, the Litecoin Cash thing that just happened. So I think that it's going to come down and then see you later. That's the end of that. So things like that, you just start to notice patterns. And this comes from just looking through different charts and really just talking to a lot of people. I've learned so much from so many really smart people that have helped me learn about this kind of stuff. So I would encourage anybody, if you're interested, tradingview.com, just go, it's a free, you can go get a free account, and look at any of the coins that you're interested in and start to mess with the indicators, look them up, go on to babypips.com, they get some free courses, but just learn about this stuff. This is one thing I talked about. I wanted to get more into the technicals. This is what I'm doing. I'm learning more about how to make better decisions based on technical analysis. Now, switching over to coin market cap, again, USD. I don't like to look at USD because it's a little bit of a false narrative in my opinion. I'm looking to make more Bitcoin in this market for now. Maybe some Ethereum along the way. And as you go, you could start to see that Bitcoin is not only gaining traction. A lot of these altcoins are hurting because of that. But remember the actual thing that is required for these prices to go down and for Bitcoin to go up. People need to sell an altcoin to get Bitcoin. So it's not like Bitcoin's going up and everyone's just holding their altcoins. Altcoins are being sold against Bitcoin. So there are conscious decisions being made. And so when you look at these decreases in price against Bitcoin, it's obviously a strength indicator of some sort, but it's also a way to gauge the overall sentiment of how much people are willing to hold on to their coins relative to some, versus how much they think Bitcoin's going to go up. Like, how much strength do they think that this coin really has against Bitcoin? And that's typically over the long term. Whenever you see this sort of stuff happening, the top coins tend not to have as many swings. Obviously, something like Stellar's gone down a lot today. But overall, the bigger coins, the ones that have a lot of tech, that have people that have done a lot of research, tend to hold their strength better because people understand the tech and they understand the product and the future and the partnerships, everything about it better. Now the holders are stronger, I guess is a good way to put it. And so that's a way to think about this. Obviously, that's only one piece of the puzzle. But ask yourself, when you're looking at your portfolio, what's your first reaction when you see Bitcoin going way up? For many people, it's, oh man, I'm going to sell off all of this and I'm going to put it into Bitcoin or Ethereum and let that do its thing. You want to move to safe harbor. And maybe that, that can help you out and that can prevent some losses. It can prevent some bleeding, and more importantly, it can prevent some stress, which is just as important in many ways. But, remember, you buy low and you sell high. You buy when everyone is freaking out, and you sell when everybody's talking about how much money they're making. Those are like, you just go back to the fundamentals. It's not a beginner thing. This is a fundamental thing. This is what makes people professionals, is that they can remember the fundamentals. They just deal with bigger amounts of money, typically. That's the only difference, in my opinion. So when you're looking at your portfolio, when you're looking at your individual decisions on the coins that you're looking at, ask yourself, do you believe that this is going to outperform Bitcoin or Ethereum? More importantly, do you think that the coin and the community and the developers and the product and the brand are going to outperform Bitcoin over a certain amount of time? Right? Why did you buy it in the first place? Was it short-term gains? Was it long-term gains? But you're going to see a lot of people starting to dump their altcoins because they don't want to go through what happened last May and June with Bitcoin ramping, and then all the altcoins slowly just, their USD value may stick around, but their SAT value against Bitcoin goes way down too. A lot of people are very sensitive to that, at least many of the people that are still in the space. So it's a huge game. It's all game theory. It's all game theory in my opinion. Switching gears a little bit, checking out Coinbase and Bitfinex. I only put up one. Coinbase is going to be releasing Segwit, hopefully over next week, mid next week they say, and Bitfinex also releasing Segwit. This is going to make transactions much cheaper and faster for the most part. It really clears out the mempool, and there's a lot more tech to it. But the bottom line is, the ability to use Bitcoin as a transaction to move it between different wallets will get better and cheaper. That is going to solve a lot of the commentary that comes in about Bitcoin and the faults of Bitcoin and what doesn't work about Bitcoin. This is a step in the right direction. It gets easier for people to use. If it's easier for people to use and it's cheaper for people to use, they'll move it more often. If they move it more often, the transaction volume goes up, the network gets stronger, things just work out. So these are the kind of things where when the product gets better, it gets more valuable. That's a one way to look at the overall market and price of what's going on. So this is good news. Obviously, the next huge milestone is going to be Lightning. As that comes out, that's going to be a much bigger deal. But Segwit, long time coming. I'm glad these guys are finally getting it done. I don't know if it immediately is going to make the price increase, but it will help the entire ecosystem over the next, month to 12 months or so. Now, yesterday, I talked about a tweet that the CFTC Chairman Giancarlo put out, where they are going to create a partnership with the United Kingdom. He said, we're going to go and we're going to talk. And, they had a picture, he put a picture up. It said, we had a great meeting and everything else. And then the UK, the Bank of England. Now, realize that the central bank and the Financial Regulatory Commission, they're separate departments. It's not like they're all in the same office or anything. They're different. Right? It's in the United States. It's like if Janet Yellen did one thing, but the CFTC and the SEC did another thing. It's two different people, but they kind of run in the same circles. So it's not a direct correlation by any means. But I think it is very ironic, or coincidental, I should say, that within 24 hours, not even 24 hours, the Bank of England comes out and said that Bitcoin failed, it didn't work. This is not, it's a lost experiment or whatever you want to call it. And I mean, this is as clear-cut FUD as you can get. Just fear, uncertainty, and doubt, in my opinion. And the reason why I say this is because when you listen to some of the blockchain companies or even the crypto companies that are doing well or that are integrating with banks and working with banks. I mean, Stellar is a great example of this, but there's a few others that are out there. Ripple's one. Banks are very bullish on this technology, and they know that they can't build their own. They need the tech, they need the network, they need the established things that are already built. But they also know that they can't let the public believe that something like Bitcoin, which is branded as be your own bank, the decentralized, it's like, it is the thing that will take down banks. I mean, that's the story that many people believe. And so that word is a 4-letter word to banks. Bitcoin is a terrifying word because it represents not using banks in many ways, the unbanking of the world or whatever. And so there's a coordinated effort. There absolutely has to be. There's too much evidence where the central banks of the world are going to try to make Bitcoin look like a complete failure, but they want blockchain to look like the future. And that's a very precarious balance to do. It's almost like it's like a PR thing, right? I mean, it's storytelling. How do you get a billion people to change their belief about one thing but buy into something else? And that is what you want to watch. One of the famous sayings. I don't even know who said it, but it's like don't listen to what people say. Watch what they do. That's really what goes on. So, who cares what these guys are saying and what the headline is? What are they actually doing? What are they implementing? What are they putting into their ecosystems? How are they going to do cross-border settlements? How are they going to use things like Swift? These are all really important questions because that's what really matters. What they say is for the headlines is to scare people into making dumb decisions, right? As we've seen over the last year. So don't be surprised if you see more of it. Specifically, you're going to see more headlines about governments and banks talking about Bitcoin and specific cryptocurrency, like those words as bad words. They're going to talk about blockchain as innovative and settlement layers and all, how it can make things efficient. But you'll never see them talk about this, that talk about how they can work together because of the brand issue. This is a really important point. This is a huge piece of the macro puzzle from the regulatory standpoint, because you can still capitalize on it from finding out or just doing your research on what coins are being implemented in problematic or pragmatic ways, not based on what the commentary is, right? So I'll leave it at that. I'm sure you can put two and two together with that, but realize that's what's going to happen. The word Bitcoin is a bad word to bankers, but blockchain they know they need to adopt it, and they secretly know Bitcoin is the thing, but they can't say that for a variety of reasons. The last piece, I thought this was just like super interesting from a retail standpoint. Zero Hedge, just who, I think Zero Hedge is, entertaining. We'll put it that. Put up an image, a Google image from Google Trends, where you can see search volume. It says buy Bitcoin with a credit card, and how it spiked in December, and then now it's really gone back down to very, very small, meaning people searching for the term buy Bitcoin with credit card has dropped to a all-time low, if you want to call it that, which I think is really interesting, because I think that this coincides with, credit cards being shut off and things like that. But it also I think people buying on credit is a very good proxy for mania phases of any sort of market buying behavior. Think about when you would be willing to buy a speculative asset on a credit card. It's typically not when things are uncertain, or when things are going down, or when things are just kind of boring. You're going to do it when you're in this bull run and everyone around you is like, this is going to be the biggest thing ever. You're going to make so much money. This is going to be huge. And this is, I think, a really interesting indicator for the public as a whole. Is if people aren't searching for us, we can tell you people aren't buying it, especially with what Visa and Bank of America and Coinbase, how they cut off all the credit card transactions. And so it changes the dynamic of who can enter, with how much money they can enter, what the value proposition of crypto and Bitcoin will be. And that void needs to be filled in by somebody. I would venture to guess that it's going to be bigger amounts of money. It's going to be people that don't need credit cards. They have the money already. Family offices, institutions, private equity, whether it be investment banks, whatever, hedge funds. And that's going to enter in some way. They just need the right entry point, whether it be the right coin, whether it be the right price, but something so that they can control it. And so when you look at all of this stuff together, you look at the credit card declines. That means that, or the credit card search volume declines, not actual declines, but retail investors are spending with less credit, meaning they're probably putting in less money per person. So the average buyer amount may be going down. This is loose generalizations. You're seeing central banks and governments accepting that crypto is here to stay, but they can't let it be Bitcoin. They can't let that brand survive. So they have to figure that all out. And then over in the other bucket is really where the rest of us all are, which is speculators, traders, investors, whatever you want to call it, but people that are seeing an opportunity and want to profit off of that opportunity through the market. And that's from people like you and me who are doing this kind of stuff, all the way to hedge funds that are trying to move $100 million into the market. Right? Everybody is trying to figure out what to do, how to get in there with capital that is coming out of other markets. If you want to get really macro about that, you can start to look into the bond market, what's going on with the bond market. I mean, bonds are just getting crushed this year. They're going to continue to get crushed. And when you look at what bond markets indicate, over the course of a flight to safety, if bonds are not doing well, you better believe that private money, or professionally invested money, I should say, is terrified, because bonds are typically the thing that you invest in to counterbalance stocks for balanced portfolio, right? I mean, in 2008, 2009, stocks went down, 50, 60%. Bonds went up like 5 to 10. I mean, bonds did pretty well in that whole time. And bonds have continued to do well. They've actually done really well. And so when you can't balance bond returns in as a hedge against equities, against stocks and things like that, ETFs, but stocks for the most part, that gets really tumultuous for a professional investor. So bonds are going down. Gold's doing whatever it's doing, but gold isn't a massively viable asset class because of liquidity. Stocks are continuing to rise, but there's kind of an asterisk on that with corporate earnings and the inequality and tax reform and the geopolitics of it all. There's a huge void of what is an inversely correlated or a discorrelated asset class to stocks that people can invest in. And guess what the big answer is? Crypto. So this is all converging, right? That's why we talk about macro. That's why we talk about psychology mostly in this, because that's the big game here, right? That's the stuff that you can actually make very legit predictions on. Trying to pick which coin is going to go 100x is completely it's gambling unless you have insider info or really good due diligence or whatever it may be. But the macro stuff is when you actually you can see the writing on the wall. You can look at history that tells you exactly what's happened last time it happened, and you can make very, very good bets about future moves. It's exciting stuff. It's exciting times. Yeah. And so I'm going to leave it at that. Again, coinmaster.com/tracking. Go get it's free. Just go get a free copy of this. Just get started with you can hook it up to some of your accounts. You can upload your stuff, or you can get the paid version and I'll get a small commission, but you should, because April comes around quicker than you think. All right, guys. Well, thanks for joining me today. As always, it's a pleasure being here, and I will catch you later. All right. Peace out.